Hey guys, welcome back to the channel. And in today's video, we're going to do a little bit of a different style. It's not going to be me sat in front of the chart, and it's not going to be me sat in front of the camera. We're actually interviewing Dylan from Logic Trades, who is a naked trader. And no, that does not mean he sits without any clothes on, but he did say that you get extra 10% profitability each month if you don't wear a t-shirt when trading, but make sure you close the curtains if you've got nosy neighbors. So without further ado, why don't we get into the video and first of all, really answer that main question of what actually is naked trading? Who are you and what is Logic Trades?
So, naked trading, by definition, I believe, is a streamlined approach to trading without indicators. A little about myself. I'd say I'm a pretty normal kid with some pretty big ambitions. Um, I suppose I kind of flopped school. I never really had that connection with my teachers and the subject. I'd much rather be doing my own thing. So yeah, I'd rather sort of bunk off school. Me and one of my best mates actually started up a clothing business in school, where we would skip our business class and actually work on our own clothing business, which I believe was would sort of provide us with a bit more value than actual school. I'm sure my teachers would argue against that. After school, I went on to study at the University of West of England, where I studied entrepreneurship. I never got a job out of this, so I suppose you could say this degree never led to anything, but I believe I sort of picked up a few skills along the way that'll see me where I am now. And then what is logic? So logic, I like to describe logic to people as a group of like-minded people all looking to sort of catalyze each other's development, whether this be trading, investments outside of trading, or even just lifestyle habits. The community sort of provide an incredible learning environment for both the experienced and the beginner of all these subjects. But I suppose we can go into more depth into what logic is and what it provides at the end, if you like.
Yeah, man, I think that's probably a good idea. Well, and just a quick one, just to clarify. So, is Logic purely for price action naked traders, or is it just a sort of anyone's welcome type thing?
So personally, I am purely price action naked trading, but the Logic team, we all sort of differ. We've got Dan in the team who sort of specializes in fundamental analysis, and he's able to explain all the crazy price spikes and everything that I have no clue what's going on with in the markets. We've got indicator based traders. I know we've got some people who have like hybrid sort of strategies where they mix a load of different things. So it is very sort of it's a very broad range of different things. But me personally, I'm a naked price action trader.
Sick. I think that probably leads quite nicely onto the next question, which people are probably asking, I would imagine, would be what made you choose between, what made you want to be a naked trader rather than using other technical tools that a lot of other retail traders and institutional traders actually use? Sort of what pushed you down that path rather than sort of someone like myself who uses indicators on quite a sort of regular basis when they're trading.
So for me, I started off actually reading Baby Pips. I went through the whole entire thing. And obviously, I'm sure you've done that. It takes up a lifetime, and it's full of useful information, but also full of a load of unnecessary stuff to bulk it out. But anyway, so I read that and I started off with indicators, and that's where I started. Really, I got hooked on that, and I was combining all different sorts of indicators. But yeah, so one of the main reasons why I ditched it was my sort of own. I suppose you could say it was my mindset, but it was more sort of the blame of when I would have a losing streak. I'd sort of blame it on the indicators and pie it off as not my fault, but the indicators I'm using sort of fault. Now, this is really sort of troubling for your own self-development. If you're sort of blaming the indicators or sort of any other factor that's not yourself, then you're not going to be able to see where you're going wrong, and you're not actually going to be able to sort of focus on these issues and sort of improve. And I know that you could obviously adjust your indicators to match your strategy a bit better, or you could just swap it up and use different indicators. But for me personally, I started from basics. I got rid of all my indicators, went into price action, and tried to sort of learn from the ground up. And in doing so, I sort of fell in love with the naked chart and not using indicators. I could see where I'd make a mistake. Say I was having a losing streak. Now I know losing streaks are sort of normal for all strategies, but sometimes a losing streak does hint that maybe something needs to be tweaked.
Yeah.
And I found that in my losing streaks, I was able to sort of pinpoint a bit better where I was going wrong. And for me personally, this was massive. I was able to actually write down, okay, this is why I went wrong. This is what I need to look out for in the future. The next few weeks, I'm going to be looking out for this exact mistake I've made. Now, that's not to say that you can't do that with indicators at all. It's just how my brain works.
Yeah. That's pretty interesting. I think we actually have a video coming up. I don't know when it is. It's in a couple of weeks' time. After this video will be published, but it's on Charles Dow and sort of Dow tenants, and he actually has a really important point that he made. Well, I think it was over 100 years ago now, about price basically reflecting everything in the market. It sort of shows you all your fundamentals, fear and greed. It shows everything in it. So I suppose you can extract a lot of data out of what does look like a pretty simple candlestick. So yeah, that's really interesting. I know for me personally, I like the more technical side of things with the indicator based trading and being able to use the sort of functions of price action to influence decisions and be more parameter based with my trading. I think definitely helps me. As you said, I think you've got to really look at it from a sort of personal standpoint. You've got to look at what works for you. And I think you're definitely right in saying, especially with things like fib, other sort of MACD, RSI type things, it's quite easy to remove that personal accountability from your losses. And obviously, as you're saying, I often find with a lot of my indicator, more mechanized based trading systems, the sacrifice you make for having that more mechanical system and more indicator based system is the strike rate. So we have a system that we're working on currently getting programmed, which did 140% on backtested data over 2020, fully automated, which is pretty incredible. But the strike rate is significantly lower. So sometimes you're going to experience 14 losing trades in a row, which, as you're saying, if you're, it can be quite easy to dig yourself into a hole. So yeah, I think that point about accountability is definitely worth noting, especially if you're a newer trader. I think that could be something that could be really helpful. And even if you do wish to still trade with indicators, because as I say, I'm a massive advocate of them. I think having an awareness of that, the fact of maybe making sure you're accountable, making sure you're identifying where the setup went wrong, I think is a really good point.
Absolutely.
So in terms of your trading, sort of what time frames, what sort of assets do you personally find naked trading works best on, or works best with your strategy, or is there sort of a mixture?
So there's a mixture. For me, I've got my main strategy, which I suppose all of my I've got two strategies, is what I'm saying. But the one that I prefer and use pretty much on the daily would just be a drop down analysis. Did my camera cut out then?
Yeah, there you go. You're back.
Right, I'm back. Yeah, so my main strategy would be a drop down analysis sort of strategy. I use the weekly to start off on. No, I don't do this every single time I take a trade. I mean, if I'm using the weekly, I've probably checked it at the start of the week. I've got my bias throughout the week then. But yeah, I'll generally go from the weekly to the daily to the 4 hour. And then after the 4 hour, I'll drop down to the hour and then maybe down to the 15-minute for entries. But yeah, so I'm using key levels, I'm using trend lines. And obviously I've got my my bias of which direction the markets are going to be going. And from the key levels, trend line supports, resistances, I then sort of figure out my entries, whether it's worth taking the trade, whether the risk reward actually sort of deems my trade a worthy sort of risk of my own capital before I even take the trade. I've got another strategy which I use. So I get my overall bias from the weekly or the daily, and then I use the hourly. And this is something that James is another member of Logic. He's on the sort of daily Zoom calls that I do every week. But yeah, we're working on one where we use the hourly. And so we're measuring the candlestick between 8 and 9. And after that, it's following the direction of that followed by a retest. So yeah, I use a drop down analysis approach where I use the weekly to the daily to the 4 hour and then down to the hour, half hour, 15-minute for entries.
And in terms of sort of with that, what are you sort of using for like confluence factors, or do you not use that in your trading? Obviously, with indicator based trading, or even sort of a hybrid, like what you were saying before, it's quite easy to have almost a checklist. So for me, especially when I was first starting, I used to have 3 confluences. I was trading the fib system and an EMA,
Yeah.
and I would require an EMA fib level and a level of structure to sort of pull the trigger on the trade. I imagine that's probably quite hard with naked trading because you're essentially relying on one source of information. Is that true, or?
Yes and no. I mean, I'll only take a trade if there are sort of multiple confluences. Say I've got say I'm on the weekly and then I see, right, we've got a weekly trend line. That trend line is about to be touched. Actually, this trend line is about to be touched at the same point where I see there's, say, a resistance. So therefore, we've got a resistance and we've got the weekly trend line. And then what happens quite often as well is I'll sort of put this in the Discord, say this is something that I like the look of. What's everyone else's opinion? And then we'll see someone else will be like, oh, I've got something similar. And then on top of that, they've also got maybe a fib retracement where that also lines up perfectly. But no, for me, I want a minimum of 2 confluences, if not 3. I also sort of trade with patterns, etc. So say if I see a rising wedge or a falling wedge that's coming up to a key level, also confluencing with a trend line, then I'm sort of pretty confident. And as long as the risk reward's there, then I'll be going in for that.
Yeah, and in terms of risk reward, I know I see a lot of these. I mean, it's probably not a very PC term, but I call them sort of tinfoil hat wearers. These smart money traders who'll seem to go for these crazy RR. But what sort of risk reward ratio do you use? Have you got a minimum, for example, on different strategies? What sort of are you looking for?
Yep. So I don't take a trade unless it's got a sort of 3 reward.
Got it.
That's on my normal strategy. The one that me or that James and I are looking at, we've got a 2 reward, but this is a lot more sort of systematic based. The one that we're both like looking into, and it's a slower sort of slow and steady sort of approach. However, with well, as it's systematic, I mean, it all sort of levels out. Whereas with my usual strategy of price action and naked charts, then I'll sort of I have to make sure that it's worth it because one entry is not necessarily for the same reason as the next entry,
Got it.
and so forth. So each entry has to be worthwhile. Now that's not to say they always run and hit the 3 reward. Sometimes, well, as soon as it hits the 2% mark, or yeah, two return mark, I will then set my stop loss into 1% profit. Then after that, I'll let it run. I mean, I bagged 1%. I'm more than happy. And if it does run up to hit the 3%, then happy days. If not, I mean, I can't complain. I've made money on that.
Yeah. And in terms of that 3R minimum, is that something that's just sort of you started doing from when you made the strategy and just sort of stuck, or is that based on maybe a lower strike rate with the strategy to sort of account for that potential sort of losing streak followed then by a winning streak, or how do you remember?
Honestly, I think it's just having to play about with the numbers. I mean, if the risk reward ratio is sort of too high, then I won't be entering many trades, and that's never a bad thing. I mean, not risking your capital can never be a bad thing. But I also found that whilst it's not a bad thing, I was missing opportunities that would pay off. And for me, for my strategy, I find that that's the sort of golden ratio where I can be in enough trades to actually be making a worthwhile return. Whilst these trades are sort of fairly successful, I'd say. I mean, I'm profitable with this strategy. However, if I dropped it down lower, then maybe I'd be entering more for the sake of entering things, like that.
And in terms of sort of frequency, I mean, I've got trading systems that'll do 1 trade a week. I've got some that'll do 10 trades a week. With naked trading, what's the sort of average frequency that you might find during the week? And are you focused on one asset with naked trading? Because I imagine you've got to be quite involved with the chart work, looking for patterns, looking for levels forming, bits of structure forming. So what's the sort of frequency like? What does a day look like as a naked trader?
A day as a naked trader can be very boring. I can't lie. But I suppose that's where the daily Zoom calls that I run come in. Because I'll have Logic members popping in and out throughout the day, have a chat with them, see how their day's going.
What does that sort of involve? Obviously, is that you sort of talking them through the trades that you're potentially looking at, setups that you're looking at?
Yeah, that sort of thing, as well as just a general catch up if they want. It's like a big family environment.
Nice.
But if they've got something they want to ask me, or another member of Logic specifically, they can pop on and ask there, and we can all sort of give our opinions on something, or just a general sort of hangout. Hey, how's it going? Have you been in anything today? Oh, cool, you've been in this. Why have you entered this trade? Just sort of a general chat. But in terms of how many trades I take a week, it honestly varies so much. I mean, this week just gone, I've been in 3 trades. And I mean, I suppose you could say that's quite a boring week, but I came out 3% on top. So I can't complain with that. I think the week before I probably took about 10, 11 trades. So it does massively vary. I'm never going to be sort of I remember, because obviously I'm sure you started Forex the same way I was, and you got sort of roped into
10, 15 trades a day, I imagine.
yeah. So it's none of that.
Yeah.
Unfortunately, as exciting as that would be, it's not a viable way to
No.
actually trade and make money, I suppose, unless you've got some sort of crazy strategy. I mean, I was also looking at scalping not long ago, and I was taking a few more trades a day then. I was probably taking about 5 trades a day while scalping. But you've got to be on some crazy focus, caffeine sort of tunneled in sort of mode to scalp. And I had a lot of fun with it, but it's just so emotionally and physically draining. Just being sat in front of your computer watching it all day.
I think you sort of, the worry for me when I first sort of moved into profitability and started developing strategies was this concept of not making another job for myself and not being constrained and sort of chained to the computer all day when I wanted to trade. And I mean, we sort of liaise with people from sort of big proprietary trading firms, sort of bigger than FTMO, sort of almost an institutional banking services, and their traders are taking sort of sometimes in excess of 40 to 50 trades a day, which is incredible. But their sort of bodies take a toll for that as well. So yeah, I think it's really important to sort of to make a strategy, regardless of indicators or naked trading or whatever, that doesn't just sort of kill you off. And I think it's got to be viable when you're working as well. So no, I think there's definitely ways and means. I think even with naked trading, where you use sort of like alerts and trading view to make sure you're not, as you're saying, just sort of killing yourself sat in front of the charts all day. Because as fun as trading is, people trade for cash and freedom, essentially, don't they? Albeit it comes with sort of bit of sweat and blood, but yeah, you don't want to just make yourself another job, which is
Absolutely,
it's more stressful than a sort of 9 to 5 for definite. So
for sure. That sort of leads me on to my next point. So when I'm on my Zooms, or when I'm on my sort of trading sessions throughout the day, I start at 6 a.m., finish at 2 p.m. And if I've got, say, a setup, I think might happen after this sort of trading window or my Zoom window, I'll have my sort of Zoom my alerts set up, and that'll ping through on my phone, my email, my computer. It pings through literally everywhere in the house. I can't miss it. But yeah, even if no one's involved in the Zoom call, and maybe we're having a quiet day, I'll just sit there. I'll be reading my book, and yeah, I'll be reading my book, chilling. And if something comes up, then I'll hear the ping and go for it. But it's as taxing emotionally as you make it, I suppose. You can have a fun time trading, or you can have a proper head mash up whilst you're trading.
yeah, I think that's especially in this sort of. I mean, I'm by no means a veteran at all trading, but after sort of 2.5, 3 years of actually making money in the markets, albeit at the start not very much, but it's, I think for me personally, moving into more automated trading and more quantitative trading is definitely, well, hopefully, going to sort of take some of that additional added stress and pressure off. So yeah, definitely something. And we have a system that it uses an indicator for its stop loss. It's the ATR indicator, the average trading range, average true range, sorry. And apart from that, it is just basically a price action system. So I do sort of dabble in a bit of naked trading, but a bit more of a hybrid. But I think that leads on to a sort of question, a bit sort of, I need to scratch an itch really on this question. Do you backtest your naked trading system? Because I know for me personally, I find little value in backtesting personally, because I think there's so many additional factors when you go live that aren't really involved with backtesting. I think you can be a backtesting expert and not really sort of have a clue how to conduct yourself in the market. And I often use the analogy of I don't practice how to drive on the roads on driving simulator because it's just not the same at all. And driving backwards or driving on roads that no longer exist is sort of maybe a bit pointless. So do you backtest the system? Did you backtest the system? Or how would you go about quantifying a new trading system's profitability?
Absolutely. So yeah, I found that backtesting is useful to a degree. Now, my current sort of system, my drop-down approach, I do find fairly, I do find a fair amount of success backtesting, and it gives me an all right amount of value. I mean, it's better than not backtesting at all. However, that is a very good point that you made with the whole driving or learning to drive in a driving simulator. When I was doing my backtesting for my scalping approach, I was using the 1 minute charts, and I had a fantastic time. I think the best week that I had, and this is being true to myself with my backtesting. Not saying, oh, I would have entered here once I saw the candles. This is being very completely true. I think I had a 46% week or something ridiculous.
Yeah.
I got dead excited. I jumped into the live markets, and we're talking like I was hitting, I don't know, a 3 to 8% week.
Yeah.
And I was like, what the hell's happened? How come I'm not hitting these 40%ers? How come I'm not hitting these 30%ers? And a lot of what you can't learn backtesting is, I suppose, emotion. With backtesting as well, you can sort of be in your trade and you can just fly through it.
Yeah, exactly. There's not a sort of drawn out process of sort of watching the pips tick and the P&L running.
Yeah.
Oh, I'm sort of...
And the pain of that definitely has a toll on how you trade. Also, another thing, I was so when I was scalping, this is, I suppose, still a very specific example of how what you said relates to backtesting. But nonetheless, it is true. Whilst I was backtesting, I had one of my rules on the scalping was a 3 to 5 pip stop loss. Now, when you enter on the market, sort of backtesting, you don't take into account the spreads or any of that. So when I took this to the live market, I all of a sudden had to make another 20% on top of my normal target because the spreads made the stop loss so much larger. And this is something I didn't account for, and this is something I couldn't have learned through backtesting without actually sort of taking it to the live market. I suppose I could have actually figured that one out for myself, but for whatever reason, I didn't think about that.
I think the variability of spreads as well at different trading times. For all I know, obviously, if you're trading majors, you're sort of never talking more than plus or minus a pip, but that can, especially with a stop, like if you've got a 2 pip spread on a 5 pip stop, you can't, isn't the 40%, the spreads are 40% of your stop size. So yeah, I can see how that, the one beauty with the trading robots that we're working on is we have this software that can sort of plug in variable spreads. So it factors that in, and it's incredible. We've seen strategies that are 30% a month with the EA. Now, obviously, these can take trades whenever there's no sort of human factor to the trade, so you can take as many trades as you want, and it doesn't tax the sort of the person entering the trades. Do 30% a month, turn variable spreads on, and you're down 30% a month, just from that slight little margin that the edge removes from you. So I definitely think that's really important. And I think looking at the variation between your back tested data and your live testing should sort of really symbolize that, I think.
Absolutely. But yeah, in answer to your question, I think back testing does have a place, but I just don't think you can take it for sort of what's the word? Take it for face value. Is that the
Yeah,
saying?
yeah. I
Um,
think that would probably be a good way to put it because, as you're saying, I think you've got to be quite self-critical. As you're saying, it's quite easy to backtest 30 or 40 trades, get really ahead of yourself. Geez, if I traded this last month, I would have passed an FTMO challenge, or I would have
yeah,
made 40 grand on my account, whatever. And I think you've sometimes got to just give yourself a little bit of a reality check. And we actually did a webinar on this with our members on last Wednesday, and I basically just told people to not don't sweat the backtesting too much because you could if you backtest 1,000 trades and you live test 40 and it's not profitable and you've wasted 1,000 trades worth of backtesting time. I think it's really vital to the thing that I use backtesting for personally is just to make sure you can actually use the system, make sure you understand the fundamentals of your trading system. Because a lot of the time I'll hypothesize about, all right, I've got an idea. I think every time the S&P touches the 50 EMA, I'm going to buy. I think that would work. I'll backtest it for 40 trades and it might work, for example. That's a
yeah.
very please do not trade that because that will not work. But like that sort of hypothesis I'll make sure I can actually trade it. It's feasible to trade backtesting and then go live straight away because especially when I was learning, for all it was probably quite a costly way to start when I was actually trading, not with signals, when I was actually trading sort of, I call it a strategy, but it was a pretty rough example of a strategy. It was sort of winging a prayer, basically.
Yeah.
The sort of lessons that I learned from doing that would way exceed anything that I would have learned from backtesting. Because as you're saying, even just being patient, when you sort of sitting there and your monthly salary is running on a P&L, you're up sort of 1,500 quid. It's not the same as when you're back testing and you just pause the bar and quickly write in your journal. At this point, I would be feeling emotional. It's like, nah, it doesn't work like that. So yeah, I definitely think, well, I don't know, as you say, with naked trading, I think it would be even harder because you're sort of relying on something that's not very, well, it's the ultimate discretionary trading style, isn't it? It's
Mm.
completely down to you. And
And
yeah,
that's a fantastic point that you just made about your journal. Obviously, backtesting is important, but I think actually journaling every single move you take and everything you do. I mean, I'm not saying like, I don't know, journaling your coffee breaks and how that made you feel, but I think writing everything down prepares you so much better for the future. So say something happened, I don't know, maybe you're in the trade and you know the news coming, like the news is coming out, and it made you feel a certain way, or you took some of your position out, or you didn't trade at all. Writing that down, how you felt at the time, maybe next time the news comes along and you've got a trade running, maybe then you sort of flick back and see what you felt before. My screen's just cut out again, isn't it?
yeah,
I'm back. Yeah, and so yeah, I think journaling is just a fantastic way to actually improve as a trader, maybe more so than back testing.
yeah, for sure. So you sort of answered it a little bit earlier on, but I'm sort of keen to ask again. Is it actually possible to have multiple trading strategies within sort of price action trading? Because obviously, for those of you who don't know, obviously, if you haven't already figured out, price action trading is just purely with candlesticks. That is what the price action is. If you hear me or Dylan saying price action, and just how they move. But is it possible to have multiple iterations of essentially the same thing? Because obviously price action is just one entity. It's not like you can add indicators or different layers. Or are you more looking when you're making different strategies at the different interactions with certain levels in the market? For example, how would you go about sort of obviously you mentioned before that you have multiple strategies and one that you're sort of working on. What would be the sort of process of doing that for naked trading?
Absolutely. So the main one that I use sort of employs everything. I mean, we've got supports, resistance, key levels, trend lines. Then we've got obviously got sort of patterns and stuff that the market's printing out. And that's the sort of main way I trade. But then when I drop down into scalping, I'd use mostly double tops, triple tops, double bottoms, triple bottoms on key levels. I wouldn't trade any sort of patterns or anything like that. And I wouldn't trade trend lines. So I suppose that's a different way to trade using price action. But the strategy that James and I have been looking at or looking into sort of employs almost creating a rectangle around price for a set amount of time. And then once price breaks out of that rectangle, we're looking for a retest of that rectangle. This is sort of simplified terms of putting it. So obviously don't everyone out there, don't just be drawing rectangles and waiting for retests.
Yeah, if you want to hear about this, the links to Dylan's Discord will be in the how to get in touch with Dylan will be in the description. So I'm sure he can give you some more information on that. But yeah, it's sort of general terms. So are you looking for that to sort of, so you're essentially just looking at the different ways of interpreting price action then, I presume?
Absolutely, yeah.
Right, that's pretty interesting, because I suppose in a sense it's almost the same as creating new systems with indicators, because essentially an indicator is just a function of price and or volume. So really an indicator is just giving you a different angle. It's sort of looking from front on, looking from side on, looking from the top, looking from the bottom at how price interacting with certain lags, like in the MA, for example, weighting price differently across different time frames and producing averages. So that sort of makes a lot more sense. That's something for me personally that I didn't really know whether that was a thing, whether naked traders just had one system that they just used and that was it, and they just sort of diversified across different assets. But no,
the way I describe it is sort of you've sort of hit the nail on the head there. You have one system, but I think when you do sort of diversify and maybe branch off to create new systems, you're sort of just putting more weighting on a certain aspect of the overall naked trading system that you've got.
Got it. Yeah. As I say again, it's sort of quite similar to how you develop a sort of or a hybrid based system, really. So that's quite interesting. Thanks for that. That's was something that I was generally quite curious about myself. So sort of a last question directly about naked trading, and I've got a bit of a question that's going to get a sort of bit of thought. I'm interested to get your take on this after a discussion I was having earlier this week. So the sort of last question is: do you factor in volume into trading, or do you feel that volume in FX, obviously for those of you who don't know, volume in Forex is generally pretty useless because it's a decentralized market, so you're only getting data, for example, from OND or FXCM on TradingView, and that's not representative of the data that your brokers getting, so you don't really have any sort of real accurate data compared to an index with a centralized market. So do you look at volume when you're trading with sort of naked trading strategies, or do you purely just look at that price action?
So simply put, no. I don't unless there's a reason to, or just put like purely out of interest. So maybe something happens, then I'm like, I wonder what's going on here. But in terms of trading it, no.
Right.
I know that some members of Logic do, but I've never really got sort of deep into conversation with them about that and about why they do so. So no, not really.
Fair enough, that's fine. I know for me personally, I never really emphasized it that much in FX. But as I move towards indices and commodities, obviously with them being centralized markets, you can get quite a lot of information from that. Look, when trends maybe potentially going to continuations, or when reversals are going to happen based on the volume. So maybe something for you to look into in the future if you decide, because I'm presuming you just trade FX, yeah?
Yeah, I mean, I've dabbled with I've dabbled with gold before, and obviously that's a lot more sort of fundamental. Price action doesn't have so much of a place there, so I don't know. I have a love-hate relationship with gold.
So do I.
I think it's just better to protect my capital than even sort of get involved with it. But I know a few traders, especially Dan, who I mentioned earlier on my team, who is mostly fundamental. He loves gold and he does very well off it.
Yeah, I think gold can definitely be a bit marmitey. I think would probably be the right way. I think I always have a saying, gold is not gold, and I've never ever been able to be successful with gold at all. I personally prefer to trade indices, to be honest, even over FX now. Although obviously the FXE would sort of say otherwise, but I think the beauty of Forex is it's quite easy for beginners to trade, but indices are, once you sort of understand a bit more fundamentals, a bit more about volume, things like that, it's actually easier to trade US 30, S&P 500, and sort of the DAX and stuff as well. So maybe worth one looking into, especially with the volume things. Might be able to get yourself a third strategy there.
Yeah, we'll have to talk about that another time. 100%.
Yeah. So sort of not a bit of a brain scratcher, this one. I don't know whether you're sort of aware of of high frequency trading, sort of super quantitative trading. But as a price action trader, presumably you require a lot of human elements in trading in order for patterns to sort of be continually regenerated. Obviously, 95% of the Forex market is speculative, so 95% of movements from punters, for want of a better term. How do you feel algorithmic trading firms, high frequency trading firms who are using robots to essentially not manipulate the market, but essentially soft manipulate the market? How do you feel over a longer period, sort of 10 to 20 years, that would affect your price action trading strategies, or is that not something that you've considered?
That's a really good question. It's not something that I've considered, or it's not something that I've gone sort of too deep within. I mean, the way I look at trading is it's a journey without sort of a destination. You're continuously developing. I'm profitable now, but I've not stopped learning. I'm still learning about new ways. I'm still learning about adapting to new changes in the market. So I don't think it will have a massive impact. If I were to copy and paste the way I trade exactly now into 10, 20 years in the future, then yeah, that probably won't, it probably won't work in the same way it is now. But I don't see it as being a problem because obviously the sort of, I don't know if you've heard it, the Japanese sort of word Kaizen, which means like continuous development.
Yeah.
We all employ a Kaizen approach to our sort of trading and development at Logic. So we're always sort of changing with the times, and there may even be a time where we sort of trade using bots rather than the approach that we're trading with now. So no, I don't see it as a problem, but it for sure will change the way that we trade. I'm certain of that.
100%. That's sort of always been oh, your camera's gone off.
Sorry, mate. We're back.
Ready?
Yep.
Yeah, 100%. I think that's always been something that maybe it's just I'm a massive computer nerd, I'm not sure, but I know for me personally, the whole reason the markets move is because of psychology, greed, and fear. And for me personally, I think over time, a lot of retail traders and even institutional traders who don't trade with sort of quantitative systems will be forced into retirement simply because these algorithmic trading robots are sort of covering a lot more. They're not making the markets as volatile and as unpredictable as what they are currently. And I think as over time, just my sort of personal hypothesis, if someone's watching this in 20 years time, in 2042 or whatever, or 2041, I might be wrong completely, but I think we'll see price action move into more and more of a range until it sort of becomes this almost steady, less fractal environment because of, for example, Goldman Sachs having a robot that is slightly more intelligent than JP Morgan's robot, which is slightly more intelligent than Barclays' robot. And it just sort of every single robot already knows 2 steps ahead of the other one. And I mean, even looking at the high frequency sort of trading styles, you're talking at the moment, the going rate for a millisecond advantage with latency is $100 million. So there's sort of there's big money in it. If you do want to learn more about that, there is a Chat with Traders episode that I will leave a link in the description about for anyone who's watching. But that, for me personally, is something that I'm really excited about seeing in the future. And yeah, maybe we'll have to start trading without indicators because maybe the markets won't be able to be traded in such a predictable way, and we'll have to use more discretion. But who knows? But I think to round up, I think if you want to, why don't you give us a little rundown about sort of how people can find you, get in touch, what actually goes on in Logic, in terms of sort of what it is you would offer someone, for example, who's new, and sort of a bit more about Logic and that sort of stuff.
Yeah, absolutely. So as I said earlier, Logic is a group of sort of like-minded people looking to catalyze one another's development. I mean, the main sort of aspect is obviously the FX market, but we're also talking sort of any other investments. We're talking lifestyle habits, etc. So just looking to better yourself and put yourself in an environment of people who are also in the same boat. I mean, on the Discord, which is the sort of main place where you'll find all of us, the Discord, we offer sort of a price action chat where people would sort of say, right, this is something I'm looking at. And everyone in the Discord can then say, right, okay, I agree with this, or maybe you should look out for this, or there's some high impact news coming out around the time that you're looking to take this trade. Just keep that in consideration. So there's that sort of aspect where you're talking about the actual trades. We've got like a useful links where we shared, I don't know, maybe someone's read a book or seen a video that they think would provide value to the community. They'll share it there. There's a general chat where people just sort of, I don't know, care for each other, I suppose, look after the well-being of each other. And that's a really nice thing to see. A load of, I suppose, strangers that have sort of come together to form a bit of an internet family. Then we sort of run a Zoom every single day apart from Saturdays, because, well,
yeah, gotta have a day off, man.
I don't know. But yeah, so we run Zooms every single day. James and I run Zooms from 6 a.m. to 2 p.m. And this is our trading session where we sort of outline any trades that we want to take, and we'll be about for a general chat if anyone wants sort of a face-to-face or a face-to-screen sort of based conversation rather than typing anything up. Obviously, this way you can cram a lot more information in a short amount of time. I don't know, it's just useful for some people in some situations. So we run that. We also run something called a power hour, which is literally an hour of everyone saying their most successful trades of the week, why they took it, what they've taken from this trade, and what they'll apply. So it's not just a sort of, I'm gloating, I'm showing off, I took this trade, I made a lot of money. It's actually sort of looking into the value behind the reason why you trade and what you'll sort of be taking forward from that. And then on Sundays, we run a weekly sort of outlook. So the other boys involved in Logic, James and I don't take this. So there's 5 of us sort of main members of Logic. Oscar, Dan, and Logan take this, and they sort of provide a bit of a heads up for the week. Maybe there's some news. Dan will have the news sort of mapped out. I don't know, maybe Oscar will look into the weekly bias in his opinion, and Logan will say this is something that I'll be looking at. I don't know, maybe you guys want to have keep an eye on it too. So we've got all that. Then we've got sort of journals and stuff within the Discord where people can fill out their trades, their emotions, and say if in a month's time they're still unhappy with the way they trade, they can approach me. Hey Dylan, I'm not profitable. I don't know why. Can you take a quick peek at my journal?
Yeah.
I'll say, yeah, of course. And because all the journals, they're sort of they're all the same, they're all uniform, I'll be able to actually look into it and see, right, so this is what you're taking, this is where you're trading, your stop loss is X big, you keep getting stopped out because of this reason, maybe we'll work on this, that, or the other. But yeah, so we're just looking to better one another with all elements of life, I suppose. As corny as that sounds, it is a very cool.
I think trading can be a lonely, can be quite a lonely place. I think even just being able to come onto a Zoom call and just have a normal chat and sort of have a chat, because I always have this concept. I was chatting to one of my students about this the other day. Having an environment that's not trading related but with traders, I think, is a really good place to grow. And even for things, we've got sort of small business owners and stuff in our community, and just being able to talk to people who understand simple concepts like supply and demand that your friends from sort of school or your local area might not be interested in or understand, I think is a fantastic place to be. And it can be a supportable, I think, especially at the moment with the sort of lockdown that we're experiencing and things like that. So no, that sounds awesome. So if someone wants to get involved with that, do they just go to your Instagram? If so, what is your Instagram? Just plug that. We will get a little pop up on the screen, but
yeah.
Instagram, have you got a website? How can people get in touch with you, Don?
Absolutely. So we are looking at getting a website, but for now we've got the Instagram, or we've got multiple Instagrams. I mean, we can plug mine, which is dylantrades.fx. And then we've got the actual Logic page, which is just Logic Trades, I believe.
Awesome.
I need to double check that, actually. I'm sure it is just Logic Trades.
That's fine. We'll get them on the screen.
Can I do that thing where I point and it'll pop up there?
Yeah, point somewhere and we'll ask. I'm sure we'll be able to get it up somewhere on here.
Here we go. So here's Logic Trades.
Yeah,
there it is. Dylan Trades.
There we are. We'll try our best to get that on the screen if we can.
Brilliant.
Awesome. And is that sort of a subscription thing? How does that work?
Yes. So the Discord itself, we've got two different subscriptions, I suppose. Like as of now, we're looking at sort of developing that further in the next few months. But I won't reveal too much about that. I mean, that'll be all over my Insta. That'll be all over.
Something to come back for.
Exactly. But yeah, so we've got a read-only subscription, which is free, and that basically gives you access to not everything, but most of everything in the Discord. You just can't actually interact with people, but you can see everyone else's interactions. With the sort of price action sort of analysis and stuff, you're less involved in those chats. The price action, the fundamental chats and stuff like that, you're less involved in them, but you are still sort of involved in the fact that you've got your basic sort of pop-up saying, right, this is coming out for the fundamentals and this is what's happened in price action. And then so you've got the paid membership, which is £10 a month, or £9.99 I should say.
Basically,
a Netflix subscription, guys, so don't be stingy.
Exactly. And this is just full everything. You get all of our attention. You get access to all of the Zooms that we run on, 6 out of 7 days a week. So it's fantastic value. I mean, you've got hours and hours and hours.
Yeah. I might join myself, see if I can learn this naked trading thing.
Mate, there'll always be a space for you. Always. And yeah, so you've got access to everything, and you're able to sort of interact with everybody on the Discord. And obviously, in sort of paying, you've got guaranteed sort of access to like-minded people who are keen to actually better themselves, rather than people who've signed up because they saw that it's free.
Yeah, 100%.
So the value is incredible for something, like you said, as cheap as a Netflix subscription.
Yeah, 100%. I think there's no arguing. I think the fact that the Zoom calls, I think the amount of value there in itself I think that is just fantastic. So definitely, guys, if you are keen, or join the free Discord, people, and see what this is all about. But yeah, I think unless you've got anything else you'd like to add, I think maybe we'll wrap it up there, Dylan, if you want.
No, yeah, I think we've covered everything. I'm sure there'll be a million things as soon as we hang up, but for now, I think we're good.
Awesome. Well, I will leave all of Dylan's socials and information in the link in the description in the links. I'll make sure they're at the top. And yeah, thank you very much for coming on. If you want to ask any questions to Dylan, I'm sure I can let him know when the video is going live. It'll be, I believe, in 2 weeks' time now. And I can get Dylan to hang around in the YouTube comments when it goes live. If you've got any questions relating to that, and we can do a live if there is appetite for that there. So do just let us know in the Instagram comments. Make sure you go and follow Dylan. Make sure you subscribe to the channel. Make sure you like. And with all that being said, guys, cheers. Now we'll see you in the next one.